we'll start with Bitcoin. And there's a perspective I want you guys to consider, okay? Forget what's happening on the 4 hours, forget what's happening on the daily, right? Think about it like this first. Let's look at the 12 months to begin with. This is the index, that's why I can see this, but you can pull up any chart, Binance, Coinbase, whatever, you'll be able to see this, right? This right here is the area I'm currently looking at, right? This is the first area of note to me. Why? Because this is an area where sellers were active, right? This, I want you to think again in terms of buyers versus sellers. My students will be used to this, right? This is how I analyze price action personally. But for those of you that aren't used to this, think about it like this. What is this candle showing you, right? This candle is showing you, first and foremost, where the price opened, how low you went during this candle, how high you went during this candle, and where the price closed, right? And many people just look at that and think nothing of it, but you can take a lot of information from this. You can glean a lot of information from this. Right, so on the 12 months, what this is telling us is price opened at 28,976. Price dipped as low as 27,741 before buyers took control, right? This is an area now where I know buyers are in control, right? This is an area where buyers are in control. So I can get rid of that. Price went as high as well our previous all-time highs, which in this case is 68,997, right? And last but not least, right, price ended up closing at 46,195. The following candle went a bit higher, right? It opened a bit higher, but it doesn't really matter to us. What matters is this, right? What this is telling us is, as soon as price hit 68,997, sellers took control, right? How do we know this? Because look what happened after 68,997 was tagged. This entire move up, right, was dropped back down, right? This is telling you, yes, buyers drove the price all the way up here, right? And looking to the left, we know in terms of price action, there's no history here, right? We've got, this is all new data. It's going parabolic, but for whatever reason, and there's many reasons as to why this topped out here, right? Especially if you consider fibs. But 68,997 was the top, right? And that's where sellers started to pile in, and this ended up happening. Now, what this is telling us is, this is telling us once 68,997 was hit, suddenly there was a flip in narrative, right? There was a switch flipped. All of a sudden, supply was greater than the demand. Sellers were in control, right? Because we know that price dropped all the way to 46,252 before closing. So with that in mind, I'm going to take this here. I'm not going to call this a supply zone, because to me, supply zone is something different, right? That's a liquidity pocket. We're looking at structure. This is a, let's say, zone of supply, right? Or a seller control area, whatever you want to call it. This is an area where sellers were active over buyers. This is an area where sellers demonstrated their strength over buyers. And the following candle simply confirmed that, because look, buyers tried to close above, they drove the price up, but no, right? Look where you ended up closing up, right? Meaning that the supply in this zone was confirmed by the following candle as well. And now we can take a look at this and we can say, well, what this is telling us is we haven't got any candle body closes. Okay, this is currently on the 12 months, but we haven't got any candle body closes above this key area, right? Meaning buyers did not have the strength, right? Did not have the strength to provide enough demand to absorb all the supply from the sellers in this area. Meaning this is an area where sellers are in control, right? So in the future, if you want to go higher, this is the zone that you need to flip, right? Preferably you flip the mid and then you flip the top and you go higher. But as long as, right, as long as you are not closing below this, you are bullish on the higher time frame, okay? You are so bullish on the higher time frame. We can keep expanding to this, okay? This is the 12 months. 6 months is the exact same, right? 6 months is the exact same. So we've got this zone, right? We've got that covered. This is previous all-time highs. This is no candle body closes above this area on the 6 months also, right? Let me extend that one to the right. What about the 4 months? Okay, on the 4 months, we've got more data, right? On the 4 months, we've got more data. So I'm going to keep drawing these boxes, right? So on the 4 months, this is as high as we went in terms of candle body closes, right? Right there. Same argument as the one we just made. On the 4 months, buyers couldn't close any candle bodies, right, within this zone, right here, within above this area in the length of this wick. So this right here is now the 4 months, right? Let's go to the 3 months, right? 3 months, slightly different again. So I'm just gonna, keep doing the same thing basically. Keep piling this on, just like this. So the biggest is the 6, and then it's the 4, and then it's the 3. And last but not least, let's look at the 2 months. Okay, this is what the 2 months is telling us. This is the area we need to watch for. On the monthly, it's the same as the 2 months, right? 2 weeks, right over here, right? This is as high as we went before sellers took control. Just going to keep expanding that to the right. And the weekly should be the same as the 2 week. No, it's a bit higher actually. And this is the weekly, right? Last but not least, right over here. This is no candle body closes above this zone, right? And you'll see the reason why I'm drawing all of this out in a minute, okay? So what you're saying is, right, the mid of such areas are always important, right? So again, we'll start with the 6 months, right? Let me get rid of the raise here once, right? So we know our 6 months is right over there, and we'll just work our way down. So we'll begin with the highest time frame one of them all, which is the 6 months, right? Let me get rid of this one right here. Oh wait, no. There. This is the 6 month. This is the 4 month. Yeah. If you notice what we did, right? If you look at the actual higher time frame analysis for Bitcoin, the area where sellers were in control in history, right? This is telling you this is this area where sellers took control from the buyers, right? Such an area, the mid has been flipped, right? Like I said, as long as you're holding, especially the top half of the zone, you're bullish. The dump we had previously, you retested the mid of the said area and you held it, right? You're still above the mid of the said area. As long as you don't close below this mid, you've got no reason to think you're going to go any lower, okay? Because now this becomes, and the reason for this, why? Because like I just mentioned, right? If this is a historical area where sellers were in control and you start flipping the mid of that, especially to support, you're saying you've accepted into the top half of this zone, right? Look, right over here. If this holds, you've got no reason to wish for lower, right? Because you've held a key area. Ideally, what you want to do, as long as this holds, is you want to see, okay, can we go and flip the top? That's what you should be asking. There's no point looking for lower until you get the price action that breaks these lows and you get the closes below, right? Even on the weekly, look, we haven't had a single candle body close below this area, right? Not a single candle body close below this area. Not even on the weekly. Not even on the 3-day. Not even on the daily, right? In fact, you had amazing long entry here. You retested the mid, right? You retested the mid, you closed above, you had your confirmation play for a long right over here, right? But as long as you stay above this mid, like, everything is good. You're just chopping at a very, very key area. That's all you're doing, right? Look, literally area where buyers couldn't close any candle bodies above before. Now you're consolidating at the top half of said range, right? Now, if you consider the more lower time frame ones, right? So the 4 months, you are currently losing the 4 month mid. Sure, that is, you know, a key level. And that is also why you have these candle body closes here, right? So this is the 4 month mid here currently. You've lost the 3 month mid. You've lost the 2 month mid, right? You've lost the monthly mid right over here. Or sorry, you've lost the 2 week mid and you've lost the weekly mid. But these are all levels you can go, and in the future you're just going to be SR flipping them, right? Very, very close to each other. These just become areas you need to get above to get higher. But that doesn't mean that you're bearish, right? For all you know, you could be creating some sort of wedge pattern. You could be consolidating within the wedge, right? Until the key levels are lost. And for me right now, the key level is this mid, right? So you'll just be looking at this right here, right? This general area here. If you lose this and you start consolidating below, you fail to reclaim, then yes, you have an argument to say we might hit 51k Bitcoin. We might even get to 48k. But until that happens, there is absolutely no reason for you to be sat there thinking we have topped. Okay, there is no reason to be sat there thinking we have topped. Everyone was saying we topped over here, when in fact you were breaking out of such a key level, right? You were breaking out of such a key area right in this area, and you even flipped it, right? And then you had a confirmed trend shift, and then everyone was saying we've topped over here as well. This is just, you know, liquidity grab, we're going to go lower. When again, in fact, all you did was flip such a key area, right? Arguably the most important area you had above this zone. All you were doing was flipping that. But yet people will be losing their minds over here, right? Because this is an example of time-based capitulation. BTC didn't really dump. It was just low volume, right? Not really volatile, apart from the big, you know, cascade of liquidations. But at the end of the day, look, no key levels were lost. In fact, there were all signs of strength, right? Strength. Look, not a single candle body closed below the zone, right? And in my humble opinion, I think that's exactly what's happening right now. Right? I think that's what's happening right now. The sentiment is so dead. You would think big BTC saying, you know, pulling back all the way to 40k or some shit like that. That hasn't happened yet, right? If you, like I said, if you lose this mid, then you have a reason to believe that. Then you have a reason to target all the way down to 46k if you want. Be my guest. But until you lose this crucial area, with confirmation, I don't mean just a wick down, right? A higher time frame close below this, failure to recapture, that is when you should actually be bearish, right? Because then you'd have a higher time frame shift in structure. You don't have that yet. You absolutely do not have that yet. And also, I've been saying on my channel to watch the 2-week candles rather than the weekly, right? I said that more than a month ago now. I think I said watch the 2-week candles because like I said, time-based capitulation. You want enough time. You want enough time to pass for you to really analyze what's happening. You can see all these SFPs to the top side, right? Clearly a lot of supply, which is to be accepted because look, you are at previous all-time highs, right? They're not going to make it so easy that you can just absolutely blast through and run for, under the multiples of X's after you've already gone up nearly 400% from the lows. But even on the 2 weeks, no key levels have been lost, right? I mean, so far, you'd actually been closing above, the higher time frame important mids, the 6-month, right? The 3-month, the 4-month, you've been closing above that. And now, sure, you've lost the 4-month and the 3-month mid, but you're still above the 6-month mid, which is the important thing because guess what's happening in 6 days and 8 hours, right? We are getting the 6-month close. We have 6 days until, I don't know how many of you realize this, we're getting the 6-month close in 6 days. Very, very important. If you close above, you're closing at an area, look, where you couldn't close below before, right? You're closing at said area. That is very, very bullish. And that leaves a very, really nice stamp for future price action. 4 months, we're closing in 2 months. So 4 months doesn't really matter right now. 3 months, we're getting the quarterly close as well, right? In 6 days, 8 hours. So we're getting the 6-month close, we're getting the 3-month close, and look what's happening. And if you look at this in perspective of the 3 months, right? So let me just leave the 3 months one on. So this is the 6-month, this is the 4-month, this is the 3-month, right? On the 3-month, you have broken out of your previous, like where you couldn't on the 3 months. This is where you couldn't close above before 58,787. Right, previous bull market, this is the area where you could not close a single candle body above before on the 3 months. But now you've had a breakout, and so far you've actually had a successful retest of this area where you couldn't close any candle bodies above. You're literally confirming, look, sellers at this point in time, you had confirmation that sellers are in control, buyers couldn't hold any candle body closes above, but now it's the opposite. You've got confirmation that sellers are trying to close below, but buyers are really, really holding the floor up here, right? And we've got 6 days. Of course, in the 6 days, we might get the mother of all crashes. Who knows, right? You can't say with certainty we're going to go up from here, right? There's never a 100% chance something's going to happen. But this is bullish. Just look, like, even if this is the 6-month mid, this is the 3-month mid. Sure, you've lost the 3-month mid, but the 3-month low is held, right over here, and the 6-month low is also held. I mean, 6-month mid is also held. This is a very, very bullish candle close on the 3 months if it closes like this, okay? Even better if you manage to close above the mid. But we'll see, we still have 6 days. But even if you close below here, sure, you could chop some more, right? You could chop some more. I'm not saying you can't, but you wouldn't be expecting massive, like 40% cascades on Bitcoin, right? Not without any good reason. Not without any good reason, right? So with that in mind then, right? With that in mind, like I said, 3 months closing in 6 days. 6 months is closing in 6 days as well, right? 2 months is also closing in 6 days. Here's the 2 months. You are currently below the 2-month close, which it'd be better if you could close above in 6 days. Of course it would. So we'll have to see, right? But these are very much indecision candles, right? Sure, buyers are struggling to hold above here, but sellers are struggling to push this down as well. The floor is being held. These candles are indecision candles. So monthly is closing in 6 days as well, right? So again, we have 6 days to close above this. If you can close above the 2-month, right? And this monthly and 2 months are literally the same here. If you can close above 61,359 by the end of the month, that's very, very bullish. 2 weeks is also closing in 6 days, right? Again, like I said, if you can close above that, or if you can close above the 2 week. Why do I have all of these? Oh wait, yeah, horizontal line and this. Get rid of that. Yeah, if you can close above the 2 week high by the time the 6 month closes, obviously you can imagine how bullish of a candle that'll end up looking, right? Who knows, maybe you get that daily reversal, right? Sometimes that happens where you have one candle down and the next candle just reverses the entire thing after a couple of days. Maybe you get something like this. Look, you had a 2 week candle down, consolidation, and then a complete reversal, right? But what I'm trying to say is, look, you're above key areas for Bitcoin at the end of the day, right? If you take into account the price action you saw here in the past with regards to buyers and sellers, you're getting the opposite right now, right? This candle tells you everything you need to know, and this is bullish. Sure, you can, the 6 month might lead to some chop. You might get a delayed bull market, or rather delayed continuation of a bull market, right? Maybe you come and retest the 6 week lows. Who knows? Maybe you get it dump to 46k, but I'm not going to be thinking about that until we have a confirmed loss of the mid, right? And like I said, the mid right now is around 57,624. But until we lose that, I'm not thinking about down here, right? We need to lose this first. We need to have a convincing loss of this. If not, you know, there's a very high chance you might just reverse and go up. Very, very high chance. Because out of the levels you need to hold, the absolute important level, what's going to close? 6 months, you're above that. Right? Your 6-month close is above. So just something to keep in mind, right, in terms of Bitcoin. A very stripped back approach, away from our usual, you know, loads of fib levels, loads of different confluences, very, very stripped back, just simple TA based on price action. That's all I'm showing here, to really, really simplify things, right? Maybe switch your perspective up a bit. Let me check back to the chat real quick. Yo, what's up, E, bro? Yeah, I'm good, man. How are you? Okay, so that's another way to look at things, right? For now, I'm simply eyeing especially the 3-month and the monthly, the 3-month, monthly, and the 6 months. That's what I'm eyeing. So here's 6, here's 3, and here's the monthly, right? These are the ones I'm eyeing right now. Turn this off. Yeah, turn this off as well for now. These are the three different ones that I'm eyeing. Again, 6 months. 4 months is pretty much the same, so I'm not really going to eye this one. But again, you're above the 4-month low as well, right? If you go on the 4 months, you're still holding the 4-month low, right? This is the third of a year, obviously, very important. You still have 2 months for this 4-month candle to close, so we'll see how that plays out. But the 3-month candle close, well, that's going to be a very telltale sign of how that's going to progress on to higher time frames, right? So here's your 6 months, here's your 4 months, so here's your 3 months, right? And then here is your 2 months / the monthly. These are the 3 important ones I'm looking at right now. Okay, 3 days. Let's take a look. If you really zoom into here, everything that's been happening at the end of the day have been happening around these mids and the highs and lows, right? That's all the key levels have been happening there. Key price action, rather. That's where everything's been occurring around. So that's Bitcoin, right? Yeah, we're having slightly red. It's to be expected. Look, you're within a range at all-time highs, right? They're not going to make it so easy for you. But like I said, in my opinion, this is time-based capitulation, okay? They're stopping you out. They're making you waver in your decisions based on time, not based on price. You haven't had those absolutely freaky, you know, bear market candles at the end of the day, right? Look what's happening in the bear market. You don't have this, right? You don't have this. You're not slipping through key levels. This is controlled, right? This looks very, very controlled. So if anyone got any questions, just put it in chat. Otherwise, I'll carry on with looking at other things. So if you were to lose this mid, you do have this area here that I mentioned before, right? And now if you consider things in terms of key inflection areas, I actually believe there is a key inflection area there, right? Yeah, there is. It's just below this demand zone, right? If you lose this, and more importantly, if you lose the range mid, here we go, right? That's where we're currently sat. This area right here. If you lose this, look, you have so much confluence in this mid area here. It's going to be hard, like, until you absolutely lose this, I do not think you're going to see, like, anything lower. And for me, this was such a strong buyback, right? And the structures there, hang on, let me do this. Range, many ways to look at this, right? You might be downtrending like this, for example. That's one way to look at things, right here, right? There's definitely one way to look at things. And if you are thinking along that particular pathway, I believe I do have a parallel channel for this one. So, yeah, you're approaching. Look, we're bouncing off right now. You're really close to approaching the golden pocket of this downtrend, right? If you're considering the trend along with your fibs, you're really close to approaching the golden pocket. You might have a deeper wick down to the golden pocket liquidity rate, to the deep value areas. It's possible in time and it's possible in price, so it's definitely possible. But these aren't where you look for shorts, right? That's what I'm trying to say. These aren't where you suddenly flip bearish and sell everything. If you want to take profits, you do so at range highs. You don't be emotional here, out of fear, and capitulate everything again, right? Like if you're someone that's literally lost your entire port, in this chart, then you just got to step back and evaluate what have you been doing wrong, right? But you're approaching super key areas, right? If you think about where we are on the macro, look, golden pockets for the macro fib retracement right over here, right? This trend we've been following, 0, 1, all the way up here, right? This is this is a channel that's valid because I placed this during the bear market low, right? And then the levels you can see have been respected. So, well, this is clearly valid. We've already had one fill of the golden pocket, right? If we confirm a second tap, even a higher low at this golden pocket here now, there's so much different confluences as to why this is bullish, right? You just be looking for the high, low, reclaim, and send it up. So many different confluences as to why we're bullish here. So with that in mind, right, just layer in, like all the calls I gave in my channel, I will be layering into, right? I've been layering into them in dips. Key level, as long as the key areas are hold, you just layer in, right? You just layer in. It's that simple. That's the whole point of layering in. You don't buy everything at once, right? You leave room for the dips. And people are like, oh, when do you know the dip's going to happen? Bro, we're still within the range. Do you really think a major dip has happened? No, right? Absolutely not. Still above the high of the 6-month mid. Maybe we get one liquidity rate of this range. Like, who knows? Maybe we get it. But until it happens, there's no point saying, oh, that's definitely going to happen, right? So, you know, anyone entering fresh here definitely should have accounted for the risks of a chop, which is what I already mentioned, right? Which is why I also started layering in recently. All the calls from September to October on alts from this move up, right? We took profits on them. They give us huge returns. I was cash heavy for a long time, and now I can't ignore some of the places these alts are at. I can't. It's areas where I can manage my risk, right? If I can manage my risk and get a good, if my RR is there, I'm going to enter a trade. I'm going to enter a trade. So this is Bitcoin, right? And let me give an example of a coin that looks just like this. Right? I said this on my Twitter as well. Put this in crypto chat as well. Just take a look at a coin like Arbitrum, right? Look where it's at. You sat at your third standard deviation in terms of volume profile. 99%. 99%. It should be 99.7, but you know, technically won't let me put the decimals in. 99% of all traded volume for ARB, right? And this is on Binance, has taken place between these two red lines. Okay, you're literally sat at the range lows of the 99% of all traded volume. 3 standard deviations, right? All traded volume for Arbitrum in Binance has taken place between these two red lines. 99% of all traded volume. You're sat at the range lows of that said 99%. You're literally using the third standard deviation as support as we speak. Okay, are you really telling me you're going to fade this here? Just look at it. Look, you have a completed M shape. You might be doing a PO3 structure here. And again, the accumulation manipulation is valid. You went to a valid liquidity pocket, right? In this case, a 2-week demand zone, 2-week textbook demand zone. You rated that and you're holding it, right? It'd be stupid if you think, I'm not going to buy here. I'm going to look at a short, right? Why? Do you know what I mean? Why would you be looking at a short at times like this? Why would you not expose yourself at times like this? This is where you look for exposure. How low is your risk if you buy? You literally look, you close below the X, right? You lose this box, you close below with a confirmation, you cut. What are you risking? Right, fuck all. If you wanted a hard stop loss, it's below this X. Now the chances that get rated is pretty high, right? Because obviously this is an area, well, I don't want to say this is where most people will buy. Most people won't buy here, right? That's just how retail works. That's just how psychology works. Most people won't buy here, they'll buy up here as the price starts to go up. But for anyone that entered long here, perhaps their stops are going to be somewhere below. So perhaps we get one liquidity rate to get those stops. If that happens, I'll be adding big, right? Because in my head, I'm thinking, okay, that's probably going to be a liquidity rate. Because think about it like this. If Arbitrum loses these lows, where is it going to go? Right? All the way back to 0.5, right? In terms of Binance. All the way down here. Like there's hardly any price action down here. Right? So there's so many alts like this. I think ARB looks one of the best. Honestly, in terms of risk management, ARB looks one of the best. You are risking virtually nothing. Okay, look, if you wanted a tight stop loss, you wanted the tightest place, right? Right now you are scared out of your mind. You don't want to risk much at all. Look, you enter here, even if you were to market buy right now, you want a really tight stop loss, it's going to be below this X. Okay, I will repeat, if you decide to put your stop loss this close, there's a high chance that you're going to get stopped out, okay? Because I can sense a liquidity rate coming. It might happen. At these lows, I don't see them just bouncing perfectly, right? Which is why, you know, I'm layering in, but I do have an allocation to DCA if we get the liquidity rate. But even if you wanted to tight stop, just to visualize things, look. Even just a point of control, it's 8.31 RR trade from where we are, right? And this is on the daily, right? If you flip that, your first target is going to be this B point of this harmonic. Look, the harmonic is there. That's going to be 17.81 RR trade. All the way up to external value area high. ANC, that's where you'll be going next. That's a 34.93 RR trade, right? That's how good your risk to reward is right now, right? This is the moment, like I said, when you layer into coins. Right? This is when you actually want risk exposure. You don't want risk exposure when ARB is up here. Like if any of you held ARB up here, why did you buy here? right? Look, in terms of volume, look where you were. You were at the top of the 99% rated, right? With no confirmation. Anyone who bought up here deserved to lose their money. It's as simple as that. Especially if you didn't have any tight stops, right? But down here, if you buy here and lose your money, did you deserve it? No. But did you take risk at a moment when it mattered? Yes. Look, if you enter here, especially on spot, you get stopped out for 5%. So what? Especially if you decide to layer in, right? Let's say you don't even enter full position size. Let's say you get that liquidity rate, right? Let's say you get this drop, something like this. When you eventually see that reclaim of this absolutely key area, you can just take another shot again. Because that reclaim is going to be so bullish, you're going to have confirmed a rebasing of key levels. From there, again, you're going to have a really tight risk area, and your targets are still going to be the same. But if you get stopped out for 5% versus all this, that's a risk I'm willing to take any day of the week, right? You don't even need to leverage this. Look, spot's going to take you a long way, okay? Spot's going to take you long. You don't need to leverage this. You can do a lot of these for spot right now for alts. So this is what I mean by when I say, like, you know, so many coins aside. Just think if you're someone who thinks Bitcoin's going to go to 40k, right? Think what's going to happen to these altcoins, okay? Does it really make sense that Arbitrum's going to lose this 50-cent level? Because if Bitcoin goes to 40k, that's where it's heading next. It just doesn't make sense to me, right? Like, why would they give you such nice opportunities to buy? So once it happens, sure, it's happened. But best we can do is at key areas like this, we can manage our risk, right? This is one of those areas where, you know, once price move back up, people are going to look back at like, oh look, you know, this was a demand zone, that's why we bounced from here. But if you're someone that's not buying here as I speak, then your way of TA is flawed, right? Looking back at something in hindsight's easy, right? Doing it live at the moment, that's the hard part. So you're gonna have to manage your emotions, you're gonna have to manage your risk. Whatever helps you to not be a pussy, at least have some exposure, get it done. But definitely don't just be cash heavy right now, sitting on your hands thinking, oh, the recession's coming around, we're going to see 20k Bitcoin, 30k Bitcoin, whatever your price target is, right? Think we've had a macro top out. I just don't see it. I just don't see us macro topping right now. That's all it is. Like I said, we lose the important levels we were talking about. I will plan accordingly. I already have a few hedges from the top. I will add to those hedges because then we're looking at macro swing structures to the downside, right? In which case you're going to have plenty of time to add to hedges anyway. But until that happens, no point being bearish, right? You could argue at an area before where, you know, you've had major resistance. Yeah, but look what happened when we came here, right? First things first, completely different scenarios. We broke out to previous all-time highs when we came here, firstly, right? This was a price discovery phase. Secondly, you had 3-month, 2-month, monthly, 2-week, weekly bearish divergence, 8-day, 5-day, 3-day, 2-day, daily. You had bearish divergence from all the way from the 3 months down to the daily, right? Every single time frame showed you bearish divergence at these highs. That's just not where we are. We haven't broken out to previous all-time highs, right? So we're not in price discovery, and we do not have any form of bearish divergence, anything like that to speak of, right? On the higher time frame, on time frames that actually matter. No trend change, no bearish divergence, nothing like that to speak of. Okay, we've actually had a decrease in volume over time on most exchanges, right? Had a decrease in volume. RSI, hang on, let me pull this up. RSI is getting lower and lower, right? Getting to the midpoint, slowly but surely getting to the midpoint. If I go onto the Binance chart one second. One sec. Where the hell is it? Yeah, for lessons. Let's go to the Binance chart. Everything should be off. 10 group 5 off. Let's go behind it actually, actual exchange ones. Binance, look. RSI is already coming down towards the mid, right? If you look at the Stokes RSI, you're probably approaching the oversold areas, right? I just don't see us a macro topping out here. Now it could be hopium, it could be hopium, right? But I'm looking at this very objectively, right? Trust me when I say I have absolutely zero emotional connection to my bags, okay? I am long dead. I'm emotionally dead when it comes to that. It's been a long time since I've been emotionally dead when it comes to my bags. This is just me trying to speak objectively. ETH ETF is approaching, right? Especially with the SEC saying they're going to drop everything against these, I don't see why they didn't turn around and reject all the ETH ETFs. If the ETF gets approved, that could be another catalyst to drive us higher, right? So there's many things to consider right now. I know I've been very Bitcoin heavy focused right now. Nearly half an hour I've just been ranting on about Bitcoin. But that's because, you know, we're at very, very key levels, right? We're very key levels. We're at areas where most people give up. We're areas where most people think this is it. They capitulate, right? They don't manage risk. Going all in right now, I would say, is just as dangerous as not, as you know, just not being exposed, because you could definitely have some more chop. Like I said, a 6 month range is definitely something on the lower time frame where you can chop within, right? So I'm speaking as an investor right now, okay? But the areas we're in, it's just very, very key areas, right? I don't want anyone missing out on a good opportunity. I don't want anyone pussing out at these such low risk buys because they think, you know, they're listening to all the doom and gloom in on Twitter and they think, yeah, this is it. Like I said, 40k, you know, that's low 50k is a high 40k target gets validated if and only if we lose the 6 month mid. Okay, at the end of the day, if we do not lose this 6 month mid, there's no reason for you to be bearish. Because if you do not lose this, you could, for you, the next 6 month candle could just send us absolutely higher, get some sort of left translated cycle, right? The next 6 months could just absolutely send us higher. This could literally, like, at the end of the day, markets work in impulse consolidation phases, impulse consolidation. In an uptrend, they know it's impulse consolidation, impulse to the upside, right? This is just one big consolidation range, right? Another way to look at things, let me quickly go back onto the Binance chart, right? For lessons. If you take a look again at the volume, right? Again, Binance is the most traded exchange, let's say, right? It's the exchange with the highest volume. If you take a look at our fixed range volume profile, right? I'm going to pull up standard deviation 1. That's all I'm going to do. This is your one standard deviation, and if you notice, what does this mean? Okay, so for most people, this is your volume profile, right? For those of you unfamiliar, this is called the fixed range volume profile. I've simply taken it over the whole range, right? So this is giving me the macro for Bitcoin spot on Binance. You are still above the one standard deviation, okay? 68% value area volume here. Look, you broke out and you've successfully retested the value area volume. What you've not done in history, you're still doing right now. You've not closed below the value area high. You have accepted above. Okay, this means for now, you are still above the one standard deviation. This, between these two blue lines, that's the most traded range for Bitcoin. Okay, 68% of all traded volume for Bitcoin has happened on Binance, okay, 58,765 roundabout and 14,432. Right, you are above that area. You are above the most traded range, and you're holding. That is a serious sign of strength, right? Look, you have your confirmation breakout, retest right over here was successful, and that took you to your second and third standard deviation again, right? Like if I pull up my second and third standard deviation for the same range, right? Let me go here, look all the way to the left, all the way to the right. That's what you're rejecting off of, right? 2 and 3 standard deviations. That's your second. So that's represented between the two green lines. That's 95% of all traded volume, and between these two red lines, that's 99% of all traded volume, right? That is literally what you're rejecting off of right now, right? So this is showing you've accepted above the one standard deviation, i.e. you've accepted above the most traded range, but you've not quite gotten over. Since this is the macro, this is to be expected, you've not gone over to the second and the third, right? So that's what's being used as resistance for now, right? You don't have any candle body closes above, it's just wicks above this area, but you're holding the level that actually matters, which is the blue line. If you start closing below this again, like I said, sure, you have the argument you're going to go a bit lower, but you've not done that. 6 month mid, not lost it. 4 month low, not lost it. Macro value area high on the highest volume exchange, not lost it. Right? So it might look all doom and gloom if you're on the 4 hours. Sure, no one's going to argue the 4 hours in a downtrend, right? But you need to realize you can have trends within trends, right? Anything of significance, 8-day, weekly, 5-day, 3-day, right? 2 weeks, monthly, all of these are in a very serious uptrend right now, right? That hasn't changed at all, okay? So just bear that in mind. How long are you willing to be in the game, right? That's what you need to consider when you look at this time frame. If you're just someone that's constantly looking at the 1 hour, the 4 hour, like if right now even the daily, right? Daily, of course, you can say we're in a daily downtrend, right? But I mean, macro-wise, are you really? Look, here's your higher low. Here's your high. Here's another higher low. You've not lost the higher low yet, right? You're locally, yes, but look, you've not lost this higher low yet. You're still in an uptrend. Nothing's changed. Do you know what I mean? So that's just, many different ways of looking at this currently, right? As to many different ways rather to consider this as well, right? We're at a very, 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 very key area. As long as we hold this, I honestly believe we're gonna go higher. I know I said this, but just think about how bearish your timeline is right now, right? If everyone thinks the market's gonna go down, is the market really gonna go down? Let me quick back to check back to the chat. Yeah, blockchain LLC, bro. That's diagonal fibs. There's many ways to use fibs. Many people who stop using fibs literally just at the horizontal. Boy, you've only scratched the surface of the, the tip of the iceberg if you think that's it. There's so many different things you can do with fibs. It's an art form. Yeah, exactly like Rasadi said, right? Most people will buy here, but we wouldn't be here. Price of 6-month mid. Yeah, sure. CeeLo, let me show you that. Let's look at the 6-month mid first. I'm going to do this on the index chart. That's my favorite for macro analysis. So let me just switch back real quick. Index. And currently, I don't know why they don't do this, right? They've gave you the middle line option, but no price. It's so stupid. Like, honestly, the devs are trading view sometimes. I think they got dropped in the head when they were a kid. But very easy way we can fix this. I'm simply just going to get a fib retracement, right? I'm going to apply default trade template once. Here's your low. Here's your high. Your mid right here, 0.5, 57,596. Okay, if you want to take the golden pocket of this range, maybe you deviate to 54k, right? Maybe that happens. But that is the target right over here. Okay, 618, 1.618, 2.618 right over here. But yeah, the mid right now, 57,596. Okay, that's the 6-month mid right over here. Do this. Plots it here for you. This right over here where you bounced off before, that's your 6-month mid. That's the 6-month mid for Bitcoin. And no worries, brother. Yeah, yeah, to put a lot of fibs, that's the biggest one, bro. On God, the amount of like plays I chart, and I forget I charted them because I do it mainly on fibs because I'm in a rush and I don't put a horizontal line there. And I check back and it's played out like how I said it would on stream or something like that. I'm like, okay, that's great. How you use those SDs? So SDs, that's my own personal setting. Not everyone uses them. But how you actually use the fixed range volume profile is you just select the tool here, bro, on the projection, on the volume based, right? Fixed range volume profile. Any range you see, you can use it over. Okay. So let me go back to the Binance chart, for example, which is right over here. Fucking hell, for lessons. Okay. This is the Binance chart. So we looked at the macro one before, right? And for the macro one, if I just do this, it's going to take me back to... Yeah, it's going to take me back. Never mind. One sec. Let me go back here. So for the macro, I just selected the entire range, right? So I selected it all the way from the left, all the way to the right. There's one. There's two. And these settings, these settings are calculated myself, so that's why they're not mainstream. Just using my knowledge of statistical mathematics to really calculate them. So this is the macro range, right? But this is the only way you can use it. For example, hang on, did I have to? Yeah, I did. Anything that's defined as a range, you can plot using this, right? What's a range? The easiest way for you to think on macro ranges is to, like I said, just understand the markets work in impulse consolidation phases, right? In an uptrend, the consolidation is going to take you to another impulse up. In a downtrend, the consolidation is going to take you to another down. For example, over here, right? Start of a downtrend, right over here, right? And we can take a look at this on the 3-day for now, just so there's more candles visible, just like that. You'll notice the general market structure is impulse, consolidate, 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 right? That impulse consolidation, general structure is maintained, right? And same for an uptrend. Look, impulse, consolidation, impulse, consolidation, right? Impulse, consolidation. But this is just one giant consolidation following this impulse right here. After which we got our next impulse. This phase right here, I like to call vertical accumulation, right? By this is just slowly grinding up. People don't know what to make of it, but realistically, you're literally making higher highs and higher lows slowly over time. This is literally designed to make people uncertain in the market, right? It's grinding up. There's no real show of strength, but fundamentally speaking, you're still making higher highs and higher lows, right? So this is something I like to call vertical accumulation, followed by impulse, consolidation, impulse, right? Consolidation and impulse. We're in just one giant consolidation phase right now. Every single consolidation phase you see is a range. Okay, you have range highs and range lows. That's why it's consolidating. If you have a range, you can use the fixed range volume profile. For example, right over here, 3-day. This is our most recent range, right? So let me just load this up real quick, and then I'll start throwing this down. So this currently on the screen are the macros, and for this, I would say the range low is over here. Currently speaking, right? The range low is over here, and the range high is just over here, right? So this is the range over which I'm going to take it. I'm going to take my fixed range volume profile. So you're going to select it from the candle all the way to the recent, right? In this case particular. This now gives me, if I now turn these off once, right? This is the fixed range volume profile. First standard deviation for this range. That's saying you for this particular range, right? Ever since the 27th of February onwards, I believe. Yeah. No, 28th of February onwards, right? If you consider all the candles that's happened since then, 68% of the most traded volume has taken place between over here, right? 7102 and round about here, right? 62738. Of course, the exact price might be a bit different. I'm just looking at the general area. This red line right here, by the way, this is called the point of control. This is for the range you've selected, where has the most transactions taken place, okay? So this is telling us for the range you've selected, the most transactions for Bitcoin has taken place at 67030, okay? So that's why it's such a key area. You can see it's been using support a lot, it's been using resistance a lot, right? So that's one standard deviation. Now if I include the other standard deviations as well, right, left to right, and once again from here left all the way to right, look, we're approaching the second standard deviation, right? If we can hold it as support, this is an area we don't want to be short, because if it bounces and you reclaim the value area low, you've entered at the lows of 95% of all traded volume for this range, right? This right here is now showing you the third standard deviation. If you lose this, you're going to have a stab at this again, basically. So this gives you, basically levels you can use as support and resistance, but also with volume analysis incorporated into it, right? So I really like these. They're really, really good. You can do this for previous ranges, right? Right over here. This is a previous range, impulse, consolidation, impulse, right? This entire area is a range. And what I'm going to do is I'm going to turn these off once, lock, make them invisible, right? And for this, I'm actually going to go on the 4 hours because the range wasn't that big to get a proper look, right? So broke up, consolidated here, consolidated here, consolidated here, and then reimpulsed back up. So what about on the 1 hour? One sec. Just want to find, here we go. That's much better. For me, the range right here is from these lows, right, all the way up to this high, basically, right? Here is your range. So from this candle to this candle is your range, right? So again, for this, you can select the fixed range volume profile and you can calculate it, right? So I'm going to select it from the candle that the range started on, which is not here, where the range ended, right here. And on your settings, you definitely don't want, on the input, you definitely don't want to extend right if you're doing it to an old range like this, right? And this is now giving me, right, the volume profile for this range. And these can act as support and resistances for future price action, okay? If you've not included the extend right setting, these can act as support and resistances for future price action. Here's standard deviation 1, right? Let me just get the entire 3 down. And then here is standard deviation 2. Not from here, but rather from, one sec, let me make this invisible. From here to here. And again, I'm going to turn off this. And last but not least, right, I'm also going to do the same for the third standard deviation. Here to here. There. And now these are for this range, right? These are the 3 different standard deviations. And what these can act as is if you ever lose, right? If you ever lose these macro levels that we're talking about, right? Then these are definitely areas we can come down to, right? So if we go on the 4 hours, for example, right? That's there. If you now zoom out and we take a look over here, this is the current range we're sat in, right? And let me go onto the settings here, turn it on in hours, go to the settings here, turn it on for hours, go to the settings here, turn it on for hours as well. If you were to lose these series of volume profiles, like you actually were to break down below the third standard deviation of this range you're in, then these now show you, based on volume, where are the next areas where, you know, buyers slash sellers might be willing to step in, right? Your next key levels, basically, based on volume. So then you can just draw horizontal lines, right? Just, you know, name them previous range, value area high, standard deviation 1, whatever, right? But you can then look to these areas for future price action reference. So volume analysis, very, very important. I love it. It's one of the foundational forms of TA that I teach in my one-on-ones as well, in my classes. But I love volume analysis, right? Because it's just a different way of looking at it, right? You think about it like pillars. You know, you've got support resistance, that's a pillar. You've got fibs, that's another pillar. Volume analysis, that's another pillar. Harmonics, that's another pillar. Liquidity concepts, that's another pillar. All these pillars together is going to give you the best chance of finding high probability trade ideas, right? So for example, if we were to lose these lows, we looked at this range, but this range also doubles up as a demand zone. This is a liquidity pocket, right? This is a modified demand zone, very classic. So you've got previous volume analysis in here, plus the fact it's a demand zone, right? Plus there's going to be macro fibs lining up with this area. Like, you know, that's how you then build high probability areas, right? Where you're going to take risk, where you're not going to take risks, so on and so forth. Sorry for a little bit of a tangent there, but I thought, you know, since someone asked, I might as well tell you guys how I personally use it. We go 2 goals, V4, right over here. Let's go back to this. So let me go back to the chat. Okay, so that's that, right? So that's where I currently stand in terms of Bitcoin. So let's quickly look at Ethereum. Ethereum, if we take a look at it once weekly, where we currently are, we lost the weekly order block mid for now, right? We had the range lows again of this previous order block. If we can hold it, again, very, very bullish. Why? You would have converted a downside liquidity pocket to a area of support, right? Meaning, you know, you can see that flip, let's say, of, oh, this used to be an area where sellers were active, but now buyers are stepping in, sellers are having a hard time pushing price down. You can see that right in front of your face, right? If this were to hold. If not, like I said, where you based off below before, this is a monthly supply zone, right? Impulse, consolidate, impulse down. Monthly supply zone, that's why you closed above the mid of this before. Again, you turn something bearish into something bullish. As long as you're trading above this zone, you're good for higher. Right? You might have another pushback down towards 2,900, 2,800. If that happens, cool. I would just add to my ETH long. I would just add to my ETH spot bags, right? They're my biggest plays as they are currently. It will just get bigger. Very, very key area, right? I know on the higher time frame, you can take a look at this, right? Look, your wicks are still making higher lows. Sure, that might mean these are external liquidity that could get raided once before we go higher. I'm not discounting that possibility. But if that happens, that's just even more low risk area to enter a trade, right? So what it is, just what you got to understand right now is you are in a consolidation phase of the markets, right? We haven't had the next resolution yet. If we have a macro breakdown of this consolidation phase, especially on Bitcoin, we would have confirmed we've got a macro loss in trend, right? Then you would be looking for shorts on the macro as well. But we've not got that yet, right? We've not got that, nor do we have that on ETH, okay? So there's just no reason to be bearish right now, in my opinion. It's scary, of course, you know, you've got these higher time frame red candles printing. Just zoom out, put it into perspective. Nothing key has been lost, right? No major resistance, no major support has been lost. Let me do that properly. From here, right, let's say to here, nothing major has been lost. It's as simple as that. If I take the rotating rectangle too, I'll absolutely love this one. Let me just do this. Let me get rid of this. Okay, support slash resistance right over here. Right, hang on. Support slash resistance right over here, right? And look, couldn't close above, came down, rejection, right? Couldn't close above, no candle body close above, breakout, retest. You're above a key area. So what if ETH comes down here? You're buying at an even better area, right? You just be buying at an even better area. There's no need to be scared, right? If you start losing this, then you'd have lost important levels. Whether you think of it like a monthly demand zone, currently like monthly zone of area where buyers should be stepping in to confirm the flip of this monthly supply into monthly demand, right? Once you start losing the mid of that, then I'll be worried. Like, okay, shit, we're gonna get to the lows now. If that's lost, then you know 2,200 ETH is gonna happen, right? But until that happens, there's no point. I'm only gonna buy ETH at 2,200. That's not what you should be telling yourself right now, because that's not guaranteed. We have key levels that are still holding for now. Okay, there's nothing bearish. So that's Ethereum, right? Very, very key. Deep down here, I will simply add, look where you are. Don't know what else to say, right? Easy areas to manage risk coming up. Have a very clean breakout of this channel. Had your retest, right? You've had your confirmation, that's green, buyers are stepping in. They've seen the validity of this breakout, that's been confirmed. The validity of the breakout's been confirmed on the monthly, on the 2 months, right? Heck, on the 3 months, look, breakout retest, again, very, very key here, right? Very, very key. And Ethereum is so much higher to go than Bitcoin, right? That's another thing. If I were to turn these off once, right? Let me turn this off. Let me turn this off. Let me turn this off. What's that bottom half of the zone? Let me turn that off as well. Range made key inflection areas, right? And then zones. Let's take a look at this in terms of what we did before. So on the 12 months, this is where buyers couldn't take control before, right? And for now on ETH, what you've done is confirm this is still supply, right? On this 6-month candle anyway. So we'll see what the next 6-month candle does, right? But all this means is it might not be time for ETH yet, right? Like if BTC is having one more impulse up, then we are expecting BTC to take the stage front and foremost, of course. 4 months, same as 6 months, right? This is the area where no candle body closes have happened above. 3 months, same thing from history, and we're still closing below. 2 months, okay, there we go, that's better. Now these are the areas that you haven't tested, right? 2 months, here's the monthly. No candle body closes above this area. These are all external targets that ETH will be hitting as soon as it gets that impulse up, right? Same on the 2 weeks, right? So the monthly is pretty much the same as the 2 weeks here. Yep, and the weekly, yeah, same thing, right? So here are your major levels, right? All the way from the yearly to the 6 months to the 4 months, all the way down, right? Of course, we're at key level, but we're not getting huge new candles from here. We are compressing, right? If this is a compression before a breakout, this is typically how it happens, right? Look, we have a load of external liquidity here. These wicks are literally telling you there are people short from this area, and those shorts have not been stopped out. How do you know? Look, each wick is consecutively lower, right? Lower wick, lower wick, lower wick. None of these wicks have been challenged. So even if you're now thinking of just going to challenge these, right? You know, people short here is going to have stop loss above, right? Now, depending on whether they're swinging, how big the balls are, it could be anywhere above, you know, some of these previous wicks. For example, like somewhere above here is a key area, right? Above this mid, above these wick highs, above this wick, that's another key area. There's going to be a lot of stops here. So that's an area, that's a draw on liquidity now. Right? That's a big draw on liquidity. Same can be said for the downside, of course, right? These are all places from where people are long. So it's just a question of, okay, do we raid lows? Do we raid highs first? It's just a question of that, right? If we raid lows first, great. I will just add even more to my ETH spot backs, to my ETH swings, right? I will just keep adding more. If you take the highs first, great. I'll be in profits, right? I'll be in even bigger profits than I am. Easy. Like, it's a win-win situation if you play your cards right. You're just range bound at the end of the day. That's all it is. You are range bound, right? You're very, very heavily range bound right now. But you know, with ETH, like I said, ETH ETF deadline coming up, all of these, right? I don't know. Maybe it's going to be a sell the news that takes us to the lows, raids it, and then we go higher. Or maybe we just front run the news completely and have a pump and then dump. Who knows, right? But these are the key areas, either way, where you'd be looking for reactions to enter trades. The range lows, external liquidity to the downside or external liquidity to the upside, right? So those are the key areas for ETH. Let me quickly check back. Okay, there we go. Okay, that's Ethereum. And right now, right, BTC and ETH are my main focus when it comes to trading. Everything else you just spot, right? Like the coins I gave in my channel, for example, like Mubi. This is a BTC beta play I'm in, right? I'd layered in at the fair value cap mid. I layered in some more at the fair value cap low. Now I will stop layering in until we reclaim these areas, right? Until we reclaim this, because I don't want to keep layering in into something that might keep going lower, right? And make my average heavier and heavier at these areas, right? So now I want to layer in areas of strength. That's going to happen at key areas, and for me, the key areas I'm going off right now are the fibs in confluence with the golden pocket. So I want to see that 886 reclaim. I want to see the FEG mid. I will layer in again, right? Just heavier. And that's how with spot, no risk, right? There's no risk because you're layering in, and if you believe the project you're investing in is gonna go higher, right? Then you should be okay holding in the red. That's the whole point in spot, right? Otherwise, just leverage trade with tight risks. With spot, you don't have to worry about liquidation, right? So I'm just layering in, and if we get a confirmed loss of these areas, there is absolutely no signs of strength coming in. I will cut if we fail to reclaim, right, on the higher time frame. I will cut if we fail to reclaim. Same with coins like these, right? Audi, look, I gave this play just before I went to Morocco, so more than a month ago now, right? Look, we ran 98%, and then now we're back at entry, right? But I'm happy, right? If your stop loss gets hit to break even, it gets hit to break even. If not, you just layer in again when you get stopped out. As long as key levels are being held, you just layer in, right? You had the confirmed breakout of the pennant here. You just layer in at key areas again, right? This was such a successful trade, basically 2x. Right, so other coins I'm looking at right now, Omni, this is one I'm looking at, right? If we can go and we can reclaim these lows right over here, I will be adding some on this, right? Again, BTC beta play, adding on to the reclaim, and hopefully we get a nice breakout, right? I will be adding on to add the reclaim. You have to look where you are. Macro retracement, you had the 764786. Deep retracement areas, right? You had that. The reason I'm not in yet is because I want to get above this liquidity pocket, right? What was once support, that got turned into resistance. I want to see that flipped into support again before I actually add, because otherwise we could just go lower, right? I don't want to do that. Not after what happened with fire. I kind of got a bit too excited with fire. That's why fire's, you know, in the red right now. So I'm being a bit more careful here. Flip, I will add, right? ETH, right? Look, LDO. I gave this spot, right? We are currently up from an average price, a bit lower than this, right? Somewhere around here, 36%, right? That was the peak, and currently from the average price, we're still up 27%. Right? And I'm layering up because I don't think we've had the big impulses yet, right? I will average up on the higher lows. It's over here, 36%, right? OP is another one. I've not called this yet, but I will soon. OP looks good. Look at the area it's in, right? Demand zone on the weekly, uptrend at the lows. If we get one more rate down, that'd be amazing. 113, 114. If we get this rate down here, I will be adding. Okay, just saying it right here. OP looks amazing. What else was there? There was a few other coins that look like this. There's so many coins that look like this, not just a few, right? All of these stocks I gave last week, by the way, they did really run nice numbers throughout the years. I'm so busy, I've not updated anything. But look, since we called it, Wolf ran 27% and currently is coming back down. But with a stock, right? Obviously, you're not looking for one big trades, but you're getting nice impulses, right? So now, if this is flipped on Wolf, you have confirmed a reclaim of the mid of a demand zone. Okay, that's all I'm saying. And you have a really nice shark still basing here. If you have indeed come back into here, like, you are not going to be surprised if one day, you know, you see Wolf for $18, right? And especially with the minor stocks, because if you are seriously believing in the long-term potential of Bitcoin, of a deflationary asset, right? Something that goes down against time, you hedge against inflation, something that's going to be more and more scarce over time. And you, with that extension, you think Bitcoin is going to hit 6 figures plus, right? You think Bitcoin's going to hit 100k, 200k plus. Then why would the companies that's actually mining the Bitcoins be or forever be just at $4, right? So these coins, these are where you take risks at these lows. You know, even if you just get to the B point, you're going from $4 up all the way to 18, nearly a 5x. Okay, ClearSpark. I called this one before I joined Unity, but this one I called back here, November 2023. Actually, no, I called this. Okay, I didn't call this in Unity, but I did call this basically when I get my calls for you know, my majority of my spot buys and my swing longs last year, right? The reason I didn't call this in Unity was because I was very strictly focused for Unity, right? I don't have a stock channel. But this is something I called around for 600%, right? And this happened because Bitcoin went from 30k to 72. Now imagine what happens if Bitcoin is in price discovery to all of these minor stocks. What do you think is going to happen to something that's clearly broken the downtrend locally, making higher highs, higher lows, flipping key areas, right? Riot, same thing. Compression, holding key level here, very low risk, right? Stop loss below here if you wanted to try and enter this. Liquidity pocket, right? On spot, your stop loss is going to be below these lows. So easy to strategize risk, right? ClearSpark. SDIG, another one, right? That I mentioned. Look, I said if you reclaim the range lows, it's good for an entry. And look, you've broken back in and you're coming down. From the entry we actually had, right? When I called this, again, on the 17th, I called this here. Since then, we have had a 31% pump. Collectively, we've got more than 100% across the stocks I called last stream. Okay, you can go back on YouTube, you can check it. It's all there. Mara, right, still compressing. As long as you're holding this area, you're good to go higher, right? Again, higher lows. If you flip this, you flip the golden pocket as well. Very key. Hut, right, same thing. HUD's actually, since we called it again, it's been going up. Was the 17th, 16th here, so 17th here. Weekly 17th. Yeah, right over here, right? We've had a nice impulse up since then. And actually, HUD was something I was looking at on the log. One sec, over here. HUD, there we go. Yeah, it was this, right? Flip the mid, you're good to go higher, right? Look, flip this, here's your next target. Hive, another one, right? Flip this, you're good to go higher. If no flip, no entry, right? Can, another one, right? Reclaim the entry, reclaim of this zone here, demand zone. Not demand zone, but zone of demand, right? Let me rephrase that. Again, just going off of the wicks. Reclaim of this zone of demand, also what used to be a bullish order block down here. That was the entry. You've not got the reclaim, right? You've not got a successful reclaim on the higher time frame yet. So no entry yet, right? You get that reclaim, you add, you put your stop loss below these wick close. No reclaim yet on this. Some of these, I went over this. Again, no reclaim on this, right? This is why, again, confirmations are so important, right? That's why I always said wait for a flip. No flip, you don't enter. It's easy, right? Look, no flip, no entry. Cypher, no flip, right? No flip, no entry. No flip. But yeah, so many coins, like I said, that so many different things that you can manage your risk on. Again, I will go back and say Arbitrum is one of the best in terms of what looks good to manage your risk. Arb looks like one of the best, right? For spot, it's so easy. You enter here. If you get a high time frame failure to get back, you just cut your spot, right? If you go in the red, it doesn't matter, right? It doesn't matter. It's spot. Do you honestly think Arbitrum is going to go to the gulag from here? It's a dead coin. Nothing's going to happen. No. Arb has one of the highest TVLs in ETH, I'm pretty sure, right? It's a good project, is what I'm trying to say. So accumulation of these is what makes sense, right? Forget about what's happening on the daily, even for now, right? Many of these also set up positions where it's going to be a life changer for you years down the line. Doesn't matter what happens tomorrow, okay? So yeah, a few another ones. Pal, this is something I call on Twitter. This looks good. I did share this one on Twitter, right? There's Lieutenant Ponzi, a friend of mine. He shared this, and then I quoted his with my own take on this play because it does look good. AI, this looks good. Holding the bottom, holding the 87886, holding this bad currently. We have another one macro down, right? I'm willing to layer into if it goes lower. So PAL looks good. But there's so many coins like this, right? Look, QNT still holding this key area, right? You had a monthly, let me repeat, monthly order block. That's the whole reason I said I'm layering into QNT. Now, the next time I'll be layering in is if we go a bit slightly deeper, or if we make a higher low, right? There's so many coins that's like this. Like Tensor lost the lows for now, right? No matter. Let me pull this. Let me delete that one actually. That's not useful for us anymore. But on the, what was you looking at, 3-day or weekly? Okay, here's a weekly bullish order block. You've lost it, right? In the future, if you ever get a reclaim of this level, or something like this, flip of the mid, flip of the lows, whatever, flip of the 702, 707, that is when you would add, because then you'd be saying, okay, look, range lows, bullish order block, deviation, and here's your reclaim. If you ever get the reclaim, you add TP1, range highs, TP2, price discovery. Well, not price discovery, but look, this entire area is an area where there's barely any price action, so you can go up really, really quick in such areas, right? So you're waiting for the flip here, or you're waiting for some sort of bottoming structure to form. It hasn't formed yet, okay? You're losing the 786 as we speak. It's not formed yet. On the weekly, do we have a trend? One sec. On the monthly, high, 2 weeks, high, low, lower, high. 1 second. High, low, lower, high. You just about front run the 0.5 for now, right? If you lose the 0.5, you have the 87886, which could whip to the 618 at 0.2918. If you want to set some sting bids, I'd recommend doing it at this zone here. Here's your sting bid zone. Maybe you're going to have a double bottom, who knows? But these are the areas where you actually want to be picking up, right? Or just wait for a bottoming structure to form. Maybe you reclaim the 764, 786, close the weekly above. We have 6 days, right? If that happens, you can try and take a risk here. But there's a lot of coins that are absolutely amazing, amazing levels, right? So my biggest spot bags right now, Ethereum, right? That's my number one. After ETH, Ondo and ETH are pretty much par on par, right? And after that, I have Aptos. Those are my 3 biggest. Vanry's a close contender to those as well. Everything else I'm giving in my channel, I'm slowly layering into it, right? That's why it's not my biggest. The other ones, I'm willing to just buy in bigger chunks, DCA more sparingly, and just hold. Okay. Even in terms of leverage, like my biggest swings right now are ETH, followed by BTC. So it's the two top kings, right? It's the top kings. That's what the money's going to go to first. When the market does impulse up, BTC is going to be the thing that drives everything up, right? But there's, yeah, so many coins that's at absolutely amazing levels, right? So many coins you can manage your risk on. SHX, this was brought to my attention by one of my students for a one-on-one. This looks absolutely amazing, right? Look, I don't know why, it was an accumulation since 2022, basically, right? Look, nothing happened. I don't know whether to call this accumulation or just, people didn't know what to make of this project, but for whatever reason, look, you had this bigger range, and then come 2023, the end of last year, it really exploded. Right? And the thing is, most coins exploded September to October, right? That's when things started. This was late. This basically exploded as the year ended, right? And then since then, look, all this crazy price action has been happening on this. It's been compressing, right? You do have a potential for a Gartley here, but feel free to, I'm not going to say feel free to add, but if this is something you're interested in, do some research. Do your own due diligence. Do some research into the project. This is for the, I think this is like XRP and something else for the sidechain related, right? But the chart speaks for itself. Weekly demand zone, again, impulse consolidation, right? This is your consolidation phase. You're holding the golden rate, liquidity pocket of the, you're holding the liquidity rate of the golden pocket right now, 61866, right? If this holds, it's good. If you reclaim the liquidity golden pocket, you're gonna go higher. If you want to have a deeper pullback, that macro 786, you literally have such a nice Gartley, pretty much a perfect Gartley on your hands right here. So waiting for something like this to happen. If this does happen, right, I got some sting bits set up here. I will buy at these lows, right? Because look, very easy to manage risk. If you start closing below and failure to reclaim, right, failure to flip these levels back into support, I will cut. But there's, yeah, so many coins. I'm not kidding when I say there's so many coins that's absolutely amazing, right? Amazing areas like this. E-gold, right, 0.903. You have a completed BAT right over here. For e-gold, I'm pretty much a break even on this project right now. I've opened a long. My stops, like I said, it's a swing for me. If we lose these, I will cut, right? I'm willing to take a 33% dip on a swing if it means I can try and catch something that might eventually, even just these highs, is worth it for me for a swing, right? So slowly layering. The next place I'll layer in is obviously going to be the mid of this demand zone, right? Aptos, this is going to be in my spot bag, right? This is in my spot bag. Look, same reason I'm entering here. If you go into the 6 months, right? Previous candle, look what happened. This is the area. Look, sellers took control, tried to drive the price down, but buyers took control, right? Drove the price straight back up. So this wick is telling you the area where buyers are willing to step in, right? That's why the 6-month buyers is right over there. Even within that, you have a 2-week demand zone below the mid of this. So if you get to this area, I'll be adding heavy, right? Which in turn pairs up as a more higher time frame 2-week demand zone right to the left. Lots of confluences at this lower half, right? I will be adding heavy if we get this on Aptos, because I do think Aptos is going to rally really hard in the future, right? When we do get that full-blown alt season, I think we do go higher. So yeah, so many projects, right? That's what I'm trying to say. So many projects are, such nice areas, really. No other way to put it. Aether, let's look at this. This one's actually holding for now. Rare for an airdrop, right? Not airdrop, but still for a project that just released. This one's holding for now. I was really thinking of buying this here, but I didn't, right? So that's what it is. I'll wait to see. If we get the reason I've not bought yet is because obviously this is a project that just came out, right? And we do have these external wicks, meaning people who did try to long or buy here are going to have their stops below this area, right? It seems all too convenient just to leave that behind. So we'll see, right? If we got left behind, if we get a flip of the range highs, I'll just add there. It's not a problem. Otherwise, I'll be watching for the raid of these lows on Aether. But yeah, so many coins are such key areas. Look, Wildcoin, 2-week demand zone, you're holding it. 764786, you're holding that higher low for now, right? If you wanted to layer into this, even TIE, you just put your stop loss below this wick to the left here, right? If you want to widen it, you'd put it below this wick here, right, on the weekly demand zone. When I say there's so many alts that are really, really interesting areas, I'm not kidding. Okay, to call, let's take a look. Blur, right? This one looks absolutely fantastic. Look, we have a completed shark here, 0.895, right? 0.886 has been hit, 1.285 on the extension, right? Daily order block right over here that got used as resistance, this supply zone, and then you back down. Daily demand zone, you lost it. Where are you now? You're on the demand zone that's lower, right? This is a demand zone. Follow. This is what we call an inefficient move up. This is why I don't like inefficient moves up, because when you do eventually get that retrace, the retraces, you don't know how deep it's gonna go, right? This demand zone wasn't hit on the way up. This demand zone wasn't really hit on the way up. So now this entire demand zone is an area where you can base at. But I did enter this, right? I didn't call it because I entered it pretty much just before I did the stream. So I was just gonna call this here, right? But blur, look, very, very easy to manage your risks here. If you lose these lows on the left, just cut it, right? But here, uptrend is also being held. The historical uptrend, you can look at this on the 3-day, weekly, whatever, right? High lows are being held. So if you get stopped out on a raid, that's what it is. You got stopped out on a raid. If you get the reclaim, this is where you add back, right? But blurs also has super, super interesting areas, right? So many alts, like I'm saying, so many alts are such key areas. Absolutely key areas, right? People want to be all, yeah, this is going to go high. I want to buy at daily order blocks once you've had such huge moves up. Everyone wants to be away from the market, shut their eyes, sit on their hands, with it, put their dicks out, have that in their hands, when it's areas you should actually be considering layering into, right? So this is a completely valid completed shark on blur. 886 has been hit, right, from this low all the way up to this high. So whether you take it or not, it's up to you. I'm just giving you a trade idea. That's an area where you can manage your risk really easily. I'm not some savant that's going to tell you for certain this is the bottom. What I can tell you is you can manage your risk really easily here. And as traders, that's all we're doing, managing our risk. There's no guarantee with, what market's going to do. Tomorrow isn't guaranteed, right? What is guaranteed is if you put your stop loss at a logical area, right, then you're going to lose minimal amounts if you are wrong. Think about price action like a plane, right? It's really easy for you to jump out of a plane that's not taken off in terms of fall damage anyway, right? If a plane's not really taken off, you're still at the runway, you can jump off a plane, you're going to be fine, right? Once it starts gaining altitude, you jump off, right? From here, maybe you're going to, you're going to have some sprained ankles, whatever. From up here, you're going to have a few broken bones. From here, you might be in a coma. From here, certain death, right? Where do you want to enter? Where, you're not going to get any, it's going to be a really easy land, or where you're going to have guaranteed death. Where would you rather manage your risk, right? That's all you got to ask yourself. It's not about how high can this go, right? It's about how easy it is for you to protect your downside. That's one thing you need to keep in your mind. Protect your downside, protect your downside, protect your downside. As long as you keep doing that on a repeated basis over a compounded amount of time, right? You do that sequentially over an elongated period of time, adhering to a strict set of rules. You just protect your downside. The returns are going to be there, because at the end of the day, right, if you hit your stops 10 15 times in a row, listen, you're either a really unlucky guy or you've got a fundamentally flawed system and you have more to worry about than just entering trades at that stage. You need to step back and reevaluate where you stand. But if you know you have a system that's working for you, then this is where you apply that said system, right? Because if your system is you're going to wait for a 60% move up and then you enter, then I would question what kind of system you're trading with, okay? But it's really easy for you to manage your downside here. Look, you get stopped out, that's what it is. But at least you took a trade in an area that actually is logical to do so. If you enter here and you got stopped out, no one can come back to you and say you're a shit trader, you took a bad trade. If you enter here and you get stopped out, I will be the first to tell you, what the fuck are you doing, you're a shit trader, right? Because you're at the area where managing a risk, right? It's a logical area to enter. If you get stopped out, you got unlucky, that's all it is. Right, that's all it is. Right, let me check back to the chart. I've been ranting for a little bit amount of time. Yeah, bro, I'm still holding my dot. I've not really done big layering in yet, but I'll take a look at it. Like I said, I've been so busy recently. Like, majority of the charts I've not looked at. It's just if I get a big dump, I'll layer in. You know where he's just Raj, bro. What's up, Rai, brother? How you doing? Have I looked at dot at all lately? Yeah, actually I'll answer that. Yeah, I'm good, bro. It's been so busy, man. Like, the business been ramping up since it's catering based and it's gone summer. It's booked out, honestly, like weeks in advance. Got no breathing room. But yeah, here we go. Right. So, yeah, that's that. Anyone have any coins they want me to look at, by the way? I'll take 2 or 3. But after that, I'll end it. I'll end the stream. Mavia, let's take a look. MAV, right? Let's go to 4 Unity. I've got one here. Mav. Mav, have we looked at this before? I don't think so. Okay, we have. Okay, let's take a look at Mav firstly. Oh, okay, this is an area we highlighted at. Here we go. Let's get rid of this one. So, what was the trade idea here? I believe it would have been 12th of April 2024. We pulled this off from here. Okay, now this would have been all the way back here somewhere. So this trade idea would have been entry at the 786. Okay, yeah. So TP1 definitely would have hit, right? Range highs, and then stop loss to break even. This was a successful trade. I can get rid of that here. Range. You're rating the range low. This is where you haven't had any candle body closes below. So if you now start flipping this into resistance, it's not good, which you're currently doing. But you are at the 87886, right? You are also at a big consolidation range from history to the left. You can see that you're basically at the top. Basically, if you want to buy Mav and you want to buy it spot, it's not a bad place to try and layer in. This is the zone within which I would layer in, okay, like this. If it's for spot, and the lower you go, the heavier you layer in, right? So you layer in some here. If you hit the 886, layer in some more. Hit the mid, layer in some more. Hit the lows, layer in some more. If you lose the mid, just cut it. Your goal is to just survive the chop, right? You are literally at the zone where you would be thinking of buys, and this is for a spot. If you want to leverage trade this, of course, you're not going to be looking for a 37% decrease, unless you want to go for like a low leverage swing or something like that. But this is at a call this a, let's say, 2-week demand zone, right? Impulse, consolidation, impulse. Actually, if you look at this in terms of weekly and 2 weeks, in terms of 2 weeks especially, no candle body closes above this area here. So, if you do lose this, if you lose the 87886, I'd actually think you're going to have a spike into this deeper area between 2397 and 0.19. But if it's, again, long-term spot, not a bad area to layer in at all. Not a bad area to layer in at all. For the move you just had, let's say higher time frame 0 to 1. For the move you just had, you have, and this is the Fibonacci I just put down, so let's turn this one off. You are literally, 87886 is just coming up, right? So maybe you have a spike a bit lower. Yeah, maybe a spike a bit lower. I think you can be patient with this for now. Maybe don't enter yet, okay? For Mavia, don't enter yet. At the end of the day, like I said, that area you need to be above, you're under that, and you're retesting it bearishly for now. So maybe after this candle, you get one more impulse down towards these lows, right? At those areas, definitely start layering in. If you want this is where you take the risk. Layer in slowly over this range. So, here. Or you wait for the reclaim of this zone. If you reclaim the top, you enter there, and you just put your stop loss below the deviation low. 2 different scenarios for you. Either enter at the pull down or wait for the reclaim. Reclaim of the range lows, you can run it to range highs, right? And you have a really easy place to put your stops as well if that happens. MTL. Let's take a look at MTL. Okay. MTL sounds familiar. Metal. Okay. Let's see which one has the most. Okay, it has a spot chart index, MTL. Let's compare it to Binance, KuCoin, Gate, and Mexi only has perps apparently. Yeah, Mexi only has perps. So MTL, MTL, Mav, MTL. Let's take a look. Here we go. What is this? Metal. Is this what narrative does this fall under, bro? MTL. So I'm trying to see which one has the most data, and clearly 2020, 2018, this clearly has more data, right? This is from 2017 actually. So not Binance. It's up 20% for whatever reason, so it's clearly catching bids. Okay, let's take a look, and I will actually analyze this in log. For lesson, where is it? No, for Unity, sorry. Okay, let's take a look. Okay, I immediately see this area of interest. That's why you're having such a strong reaction off there. What else do we see? We see 0.5, 0.414 didn't get hit, but the 0.5, which has been acting as support, right? So that was the high, that was the low that actually gave this, right? Support, support, resistance, flip to support, support again. So this is telling me as long as you above the 0.5, you're always going to go and basically hit the 6187.07. You're going to liquidity rate to the top side again. That's one way of looking at things. What's another way we can look at this? Let's see. Let me make this invisible once. Let's take a look from low to high. Oh yeah, so golden pocket got hit. 214236 got hit to the top side. 0.5 got hit. Logical place for a higher low following a golden pocket low, right? Because if you lose this, it's pretty much going to be a double bottom in my opinion. Something like this, right? So that's a very, very strong reaction of this historical area, right? You can see support, support, right? Resistance, support. So between this 0.5 and the other 0.5 we just looked at, these two, let me just create this zone. This is what they're taking as the support and resistance of this area, which price action agrees with, right? So the two 0.5s, support, 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 resistance, flip to support, support, support. Very, very key area. You can just look at it basically. This is literally where price action for this started, right? Very, very key area. So if this is the low and we're not going to go any lower, then we have a higher low, which would mean our projections are right over here. So the low wicked exactly to the 1.3, right? You're trying to close above the 214,236. So if you close above the 236, I suspect you're going to go straight back towards the 414 in this particular case here. Take a look at the daily. Okay, actually no, just about front ran the 1.3 here, but this is log, so the front run is not surprising. You've got the flip of the mid, right? You've got the flip, so the entry signal was given over here. 214 rejection, flip the mid, now you're going higher. So what are you looking for next? If you can get it, I don't know if you get it or not. Maybe you get a rebase of the 214, right? Something like this. You can see wick low, support, support, right? If you rebase the 214 and you don't close below, right? You get things like this, right? Where you just wick and you close above. Then you have a reason to try and accumulate longs, okay? Something like this. The next set of affairs, if you lose this, one more drive back into here, a high, low, something like this, or even just using the top as support this time. That's another form to look at this. But at the end of the day, right? This is a nice reaction. If you can hold this fib here, then 382414, 618 is all the way up at $8, okay? But that's of course bull market targets. If you have indeed encountered the low for this already. But at the end of the day, I do not know what MTL is. So let me check blockchain for banking. BSA compliant layer 0 blockchain for financial institutions. Okay, thanks for that, right, bro? That's interesting. Definitely. Yeah, I'll keep an eye on this one. But I mean, the chart's healthy. Look, higher lows on log, higher lows. You're not lost your lows entirely. You're if I go back to linear, you've not lost the lows, but actually the price action started from. That much is evident. And actually, if I do this, we do have a multi-year what makes sense in this case? That makes absolute sense. One sec, you need a rectangle for this, in all honesty. The wicks are too much. Let's do this. Okay, this is where we topped out. This is where it started. So let me lower this as such, so that I can find some of these wicks. That's your top. And if that's the case, we need this a bit wider. Some more wicks here. There's your top, a bit wider. I just like putting zones down instead of levels, because I can visualize, okay, how wide can we actually deviate. And this is linear. It's been acting like a shitcoin every time it gets to these areas. There we go. Okay, resistance, resistance, resistance. There we go, resistance, right? So I can make this a tiny bit smaller, and I can do this. Yeah, perfect. if you can actually go up, right, what you're looking at right now, depending on when you do it, you have different points in time within which it can happen. But if you can go up and you can start to flip these, for example, this into support, right, then you'll have accepted in a place where, again, diagonally no candle body closes, right? That's what you're looking for. You're looking for candle body closes within this blue zone. If that happens, trend-wise, you're closing candles where you just haven't managed to do so before after an impulse, right? Then you'll be looking for that grind up. Here's your impulse move. So just note this like a huge area in mind, right? I know it's huge, it looks a bit ridiculous, but this is the problem with some shit coins, right? It's what it is. And by all means, right now, this is a shit coin, right? And just look at how it's been trading. But at the end of the day, you can't argue with the structure. Look, like since 2021, the floor's been holding. The floor's definitely been holding, and in fact, it's been holding so well that since 2021, right here, even if we take this a bit to the left, you've had your deviation followed by the reclaim, right? And each subsequent wick from the reclaim has actually been higher. Candle body closes have been higher as well. This is bullish. Like a good recommendation, bro. This is definitely bullish. It's just a matter of, right, well, will there be enough hype around what it actually does that people start picking this up? But speaking subtly, I do see that, you know, the wicks are getting higher and higher and the candle body closes are getting higher, which to me suggests accumulation, okay? Plus, not to mention, like, you keep bouncing off of this really key area from history. You went and you retested this accumulation here, right? You can just literally think of this like a 3-month demand zone, right? Look, this is a textbook demand zone here. You went and you bounced off such a higher time frame demand zone already. You literally filled the mid perfectly, right? You can see that. So yeah, if you have such an important fill, I would actually argue, yeah, I think you're good to actually accumulate this, right? This 3-month close is going to be a really nice 3-month close. And again, in 6 days. Look, 3-month demand zone, closing above the all-time low, closing above important area. Let's say this 3-month close like this. If you want to be a bit patient, wait for 6 days, then this is the area, right? In the next 3 months, you'll be looking at this area to layer your buys within. If you lose this, you just cut it. Simply because this 3-month order block here, actually, no, this is still valid too. Yeah, there's a lot of nice areas you can pick this up if you so choose. If you just dump a bit more, this 3-month order block is going to provide you with support, right? The mid hasn't been filled. This is still a valid order block. But depending on how this closes, right? If this closes like this is the first area. This is the area you start layering in, basically. These two zones right over here. Let me turn this rectangle off. And let me turn this rectangle off. This is the zone within which you'd layer in, right here. But not yet, okay? Because I'm still waiting for the 3-month to close to validate the top box. That's going to happen in 6 days. But this lower one definitely picks some up here. This is a 3-month bullish order block. These aren't going to get violated super easily, and this big one actually has a death candle. So yeah, loads of cool areas coming off for this. Plus, if it's the banking side of things, like this looks good. You have such a strong reaction because obviously front round the fib levels, and 3-month order block, you tapped it, so you're getting the reaction off it. Entry was 1.22. Oh yeah, that's great. Nice, brother. 1.22 was here. Yeah, actually, I can. That makes sense. You do have some wicks here suggesting intermediate support. Yeah, 1.22, something like that. 1.228. But yeah, that's that. Let's see what other coins there were. I'm absolutely starving. So Mavia, Inge. I looked at. Let's look at Inge actually. Yeah, that's a good choice. I'll look at Inge any day of the week. Inge is something I definitely have in my port. So, 1 second before I scare some of you away, let me turn these off to those that don't know what I'm doing. Okay, look, daily order block being flipped into resistance as we speak, right? You've not closed above. Reclaim that, you're good to go higher. Don't reclaim that, then lower box it is. Honestly, I don't think Inge is topped out, as in the sense that this thing on me, I think we're going to go and challenge that. I think Inge does have room to go higher, right? But at the end of the day, look where you're consolidating. Same thing as before. This is on the weekly. This is the area where in history, right, previous in 2021 bull market, buyers couldn't close any candle bodies in this zone, right? So this is a zone where sellers were completely in control. But now look at the reactions you're getting from this, right? At the zone mid, intense reaction, zone low, you're still getting a reaction. If this holds, amazing. This could literally be a liquidity rate. If you tap a bit lower, liquidity rate, shake out anyone, but as long as you're closing within this, good. If you close above the mid, even better. I was looking at this, right? So I was looking at a potential AMD model right over here. Accumulation, manipulation, distribution. Manipulation made sense to me. You had a daily order block. You also had this, like I said. If not, then you have one more phase within which you could have one more downturn, consolidate here, reclaim and go. Depends entirely on what Bitcoin wants to do. Does he want to give a big FU candle and just go green within the next couple of weeks? Or does he want to take his time with this downtrend and just chop a bit lower, right? Depends entirely on that, what Inge is going to do. Whether it's going to really feel that 5-day demand zone, or you're going to flip that order block. But I will say, if you do flip this daily order block back into support, don't fade, okay? Flip, you enter a trade, put your stop loss below, retest wick close, put your stop loss below this low. Doesn't matter how you do it, but if you want to have a quick trade, put your stop loss below, retest wick low, aim for first TP to be the mid of this zone, second TP to be the mid of this, right? Very, very easy trade. Stop loss break even after the first mid gets hit. More of a swing, then maybe layer in, put your stop loss a bit wider, right? Or maybe manual closes a loss of key important areas to avoid liquidations on liquidity grabs, and just swing this to the upside. At the end of the day, this is an outperforming coin, right? Look, it's a coin with a narrative, is a coin that's strong, right? So as long as the uptrend holds, you're good for higher. People are scared, oh, it's downtrending. Cool, but you know, my spot buys on Inch was $1 like 80, right? All the way down here. $1.80 was my spot buys because this I bought in January. Like one of my friends put me on Inch, right? So to me, you know, this doesn't look bad at all, right? My returns on this were absolutely astronomical, right? $1.20 to $1.80 was my buy range, right? So let's say an average of $1.60. It was a bit lower than that because my heaviest were at the bottom. That's a 3,229% increase, right? It might be bearish to you if you came and you bought the top. But if you actually know where to buy, if you know to look for signs, look for the BTC pairings, look what everything's doing, then it doesn't really matter, right? $1, yeah. Right, so for me, just compound, right? I'm completely out of Inch, right? To be honest, I didn't even hold all the way to the top, right? I was out heavy by the time all-time highs got here because no one can predict how high something's gonna go. I was pretty much I had like the smallest of bags here just in case, like a moon bag, right? And then I was out of the moon bag by the time I started seeing consolidation structures like this come in. Right? After the liquidity rate happened, you're out. So, you know, just looking to read that up, right? Just looking to read it up. Inch looks good. Look, two scenarios. Flip the order block for now, or go raid the 5-day order block. At where we currently are, I wouldn't enter. If we then start flipping this order block, like I said, right? Look, flip this daily order block into support. Just enter. So that's injective. This is on linear, right? So if I put fib retracements on to begin with, right? Here we go. Currently at 764,786, right? Of previous all-time high fibs, right? If you're talking macro structure, right? Let me separate this for you so you're not confused. There's this one at a time. Macro structure, right here, all-time highs to all-time lows. You have bounced off the golden pocket. You're still at the golden pocket. You have not lost it. You might hit the liquidity rate of the golden pocket, right? In my system, this is the liquidity rate of the golden pocket. You might hit it, but it's not guaranteed, right? So if you want to spot layer in, sure, this is the entire range I'll be working with, right? Just layer in, deeper you go, heavier your bids. Now, if you consider the, right, where's this coming from? 0. Is this negative? Yeah. So if you're then considering this extension, right? Again, this is based on one sec. I really have no idea what this one's here. This should be the proper one. 0 to 1. Ah, no, this one is wrong. No, I know why. This is the okay, never mind. Okay, I've got my head on straight. Okay, this in the red, right? This is me taking the all-time low to the all-time high and then getting the projection of that. Okay, so you can see where did we top out. Majority of the topping out happened at the deep extension, right? Negative 786, negative 764. This was just a liquidity rate. In fact, if I was to, for instance, if I was to put on the 1.05 or something like that, this is literally where this topped out. Okay, the 1.05. You hit a negative liquidity rate basically. But to the downside, right? The support you had based on that is the negative 113, 114. You've lost that, so you're going to be at the negative 236, 214, right over here, 214, right? Negative 236, 214. You're going to be at that stage currently, the positive 236, 214 currently. That's where you're going to be at. Reclaim this. Look, another layer of confluence as to why this order block needs to be flipped. You are at an important liquidity rate of previous all-time highs, okay? 0.114, 0.13. This will act as a liquidity rate to any range extreme you have. So if you flip that, that's going to confirm a flip of the mid, but also a flip of this liquidity rate, right? And plus, you know, you already have the factor bouncing off the golden pocket of the macro retracement. This then is the bear market high to previous bull market top to bear market low, right? And again, you hit the liquidity rate, right, on that. If you look at that, you hit the liquidity rate right over here, 702, 707. Now you're holding the 786, 764, rejecting off of the 86, 887. So again, look at the confluence you have here. So you multiple fib pulls, but you can see the different things lining up in this area, right? You can see why we bounced where we did, right? Why we're holding this as support, multiple fib confluence. But more importantly, you can see why this is such an important area to flip. Important liquidity rate areas just at this daily order block, right? As for why we topped out, if we take the negative fib projection of the same area, once again, if you look at where the highs is, 1.886, 1.87, right? This is just a liquidity rate here. All these highs got liquidity rated. So many key points to focus on Inch, okay? Inch definitely looks good, right? Sure, like locally on a down, even on the weekly, this is then a highs, lower high. This is a weekly downtrend. But you zoom out, right? Here's your low, here's your high, here's your higher low, here's your higher high. This could just be a double bottom macro higher low for, you know, right? At the end of the day, you haven't broken this consolidation structure. So this is going to be a higher low if it inch bottoms around here. I would not be surprised if it falls cents from here. I'm not going to lie. But for a bit of safety measure, just wait till that daily order block is flipped, right? On the grand scheme of things, your entry is not going to be off that much. You just wait till that's flipped. If you're impatient, look for daily price action. As we're speaking, is pushing into the daily order block. Daily for me, 1 hour to 4 hour entry models if I'm leverage trading, right? And if I'm scalping 3 minute, 1 minute to 5 minute entry models, flip this mid, you're good to go. Okay, on the 1 hour, for instance, on the 1 hour, what do you have over here? Bearish order block, right? Flip that, flip the mid of this daily order block we're in, you're good to go. A lot of confluence. After that, send it higher. So that's what I see on Inch. Very key area. Like I said, many also say these key areas, right? Don't be scared to at least have a shot, right? Because at the end of the day, think about it like this. The reason trap traders are a thing is because people let their emotions get in the way of trading. People will long here, people will buy here, people will short here, people will sell here. That's why trap traders are a thing, right? Trap traders is literally something I look for when I'm trading, especially when I'm scalping, right? And not many people have taken my advanced class yet, but you know, in my advanced class I go over trap traders, right? Trap traders for me is a really nice confluence. Whereas majority of the people trapped, okay, I'm going to enter where they're trapped, right? As soon as you get an inkling of trap traders, that's liquidations waiting to happen, so you're just going to counter trade them. And the reason trap traders are a thing is because people traded emotions. That's as simple as that. You don't long here, you don't short here, right? Okay, since Ryu asked, I look at cake. After cake, I will be done. Okay. For Unity, this was Inch. Let's move this down. Let's look at cake USDT, and let me go to my cake USDT chart. Okay, I'm on MEXC, and then I will add this for Unity. And more than that, I will also look for okay, no, let's go to 4 Unity first. But it's so hot in the UK right now, man. I fucking hate the weather here. It's bipolar as hell. Cake. Yeah, there it is. And let me just compare if the... Is that more data? That is more data, isn't it? Okay, so let's chart something fresh, shall we? There we go. We'll take a look at this, and let me chart this in log first. There we go. Atrocious candle. There you go. Bear market low was a front run of the 298. No, a front run of the 3-4 extension on the 298. Let's see, 272s right over here. Let me do log first and then I'll move on to linear. Actually, no, I shouldn't be doing this to begin with. Should I? Because the red wick is saying price opened here. If I was to go onto the daily, I mean, it's probably going to be the same on the daily. But this wick's actually saying price opened here, closed here, went down. So it did something like this. But no, I suppose no, you can take this as a higher time from low, high, high, low. Yeah. If you do that, you would realize the reason we topped out what we did in the bull market, right? 6616 golden pocket, right? Surprise, surprise. Bear market low, we front ran the 213114, 236214 got raided, and currently you're sat at the 272, okay, which again is historical support resistance. We can see that very, very easily here. Here's your liquidity rate for cake. Okay, here's your liquidity rate. The reason I'm calling this the liquidity rate, look, wick, 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 right? This wick didn't combat this wick, and this wick didn't combat this wick. Currently, right, here we go, that's been taken. So from where we currently are to here, that's your liquidity rate, okay? But this is the liquidity, this is what the liquidity rate was based on. So this is the area where you'd actually strategize entries, right? If you wanted to. I've already got a small cake bag, right? Not huge, small. I'll just layer into some of those, right? And if something is close to break even, but I don't like the strength it's showing, I'll consolidate it into winners, right? I have no problem just market longing Ondo or something like that. Coins I know is going to outperform. Bearish order block, no, sorry, bearish supply zone got rejected. But yeah, right over here. This is the area where buyers were active. Again, same thesis as earlier. An area where buyers were active, right? Therefore, this is the area where you're looking for longs. Right over here, you have the macro 272 there as well on the log. That's what I look for cake. Look for on linear, right? If we look at linear on cake, let's see what we can find, right? Now, first and foremost, let's start on the higher time frame. Well, what is this? This is a 6-month bullish order block, and so you're not surprised that cake bottomed out where it did, right? You hit that 6-month bullish order block and then you had a nice reaction off it. So let me just restructure that. There we go. 6-month bullish order block, and then that's where you're bottoming out, right? Currently speaking, this where you currently are, is this still a demand zone? Let me see. No, 50% got taken out. It's no longer a demand zone. So again, like I said, I'll be focusing on the liquidity rate, right? Which is I've already mentioned on the log charts right over here. So if we are talking fibs, then macro low, macro high. Okay, you are below the 0.94 currently. Obviously, like being above this is much nicer. Support, resistance, right? Support, you're below that. So maybe bounce off the liquidity rate, go higher. If you don't bounce off the liquidity rate, maybe you go and make a double bottom down here, right? This order block is still valid. Maybe even go and fill even deeper. I'm not saying you're going to get 71 cents cake for certain. But like I said, if Bitcoin does actually end up having a macro downtrend now on the weekly, on the monthly, then that is a possibility, right? But like I said, you know, that's hopium, right? If you actually want to hope to buy that low, that's hopium. End of the day, that liquidity rate area, this is what I'm basing my plays around now. Look, if you lose this, then you can expect around $1.30 cake in my opinion. Okay, $1.30, around somewhere there. Then we can reevaluate. But if you don't lose this, you hold this area, you've held the liquidity rate, right? You've stopped out anyone that's trying to long from these, because at the end of the day, if you notice what cake has over here, it's a general trend up, right? Meaning this, followed by this, followed by this, followed by this, followed by this, are all areas where people longed, right? Each one's going to have a stop loss below the previous wick high, right? So this red candles could literally just be a liquidity cascade, right? I don't expect liquidity cascades to hold ever, right? So this is your external wick for now. If you want to stop this count out, right? Your stops from, they probably put their stop somewhere in this lower area, somewhere just below. Maybe they're at break even, who knows, right? But if you want to stop this person out, then you're gonna have to go below 179. But this is nice, right? Why is it nice? Because all of this was uptrending liquidity, right? This was a liquidity arc, you can say, right? This arc was a liquidity arc right here. You're stopping out a load of longs, right? And once you've had enough liquidations, you're probably gonna go and reclaim. Because honestly, I don't see how, on what planet alts are gonna keep bleeding even more, right? There are such deep values already. Who the fuck is left to sell at these areas, bro? Who's selling cake here? Do you know what I mean? Who's shorting down here? Bro, you look at this chart and you would take a short down here. You're crazy. Why would you short? This thing was at $44 at all-time highs, fam. $44, okay? Right now, this thing sat at $2. Just deep that, right? Just think about it. Are you telling me you're going to short something? Or he's going to drop under the 90%? It's not. You're already below 94% from all-time highs. Why would you plan a short? In what world is that favorable risk to reward? Do you know what I'm trying to say? So it's almost logical. You'd think it's to the upside now. Like this was literally a range created between the 8786 and the 0.94, right? This was a range, and I did actually have on the MEXC chart. I had the accumulation, manipulation, distribution thesis, right? Manipulation went to the 6-month box. So if this is just a deviation for the distribution phase, if you go and reclaim those lows, or the lows of the deviation phase, look, you're gonna go higher on cake, okay? Targets, look, external liquidity at $10, bro. After $10. 12 right after that, major one at 25. Like this, target upsides are there. There's your macro external liquidity. Same as we had this external liquidity here, your macro external liquidity is all over here. Those need to get stopped out. All of these lower highs are places where people shorted, right? There's going to be loaded resting stops above. So that's cake, right? MLT, this is going up hard, but like I said, guys, there's absolutely so many coins, right? Let's touch on fire again. This is the bag that's down the most for me right now, but it's not my, it's not like I had a massive position size in this, and I stopped layering in as soon as the 886 was lost. So I'm only down like about 5 figures, not much on this, right? As soon as the trend shifts, I will add, right? No stress for me on here. So this one I'm updating because like I said, I will keep repeating this because people might say, oh, you give a shit trade. I did not, right? This was a logical area to enter, right? Trade wise, easy to manage risk, and I literally told people I'm not going to have hard risks. First thing I said, if you want a hard stop loss, pull it below the 786 or even the wick low, right? I literally said that when I gave the call. Secondly, I also said, if you want to, I literally told people, look, if you want to get out now, because you had a breakdown, you're having your failed retest, right? I told people that as the retest was happening, and I said, if you want to get out now, because you're literally going to be getting out of break even, and you can just re-enter if you get the reclaim, right? I didn't put much into this, that's why I couldn't be asked, right? I had a lot of positions, that's why I was like, you know what, yeah, I'm just going to let this one run. Not a big problem. So, if I gave you two viable exits, right? I said what I was doing, which is just going to be layering in at deeper levels or in a trend shift, right? So once the 886 hit, I was thinking, okay, you have one sell box, 2, 3, maybe it bottoms here, right? I was just trying to front run that. It didn't. That's a risk I was willing to take. So I said, I'm not going to layer in here, right? So now I'm waiting for a trend shift. So hopefully, right, eventually we get something like this, right? What we're hoping for is once the bull market euphoria picks back up, something like this, right? If you ever reclaim the 0.6, I will layer in heavy. My average is going to be somewhere around here, and I'll be in the green, right? For me, long term, it's a risk-free trade. The only thing that would make this actually not risk-free, this project literally died, like Debs rocked and left, right? That's the only way I'm going to lose my money. So it's what it is. Apart from that, the tiny red on this right now is nothing compared to the literal, the gains we made since 2023, right? Since I did join Unity. So it's what it is, man. This one, just look, if you entered this, right, and this was your biggest holdings, you might be down red a bit if you followed me, right? But I said I'm not putting much into this. So if you did put a lot into this, then I don't know what to say to you. It was a low cap at the moment. But secondly, I'm holding this, right? The trade is not done, as in like I've not cut the loss yet, right? I've not realized the loss yet. So you had that rejection here from this, right? So I'm hoping a bit lower and then go up and reclaim once the bull market euphoria picks back up, right? I have got more than enough to consolidate into winners. I've got my bags locked and loaded, right? It's just a matter of waiting for the Bitcoin to get that big fuck off impulse candle. So that's the one loss we currently have. Or loss if you realized it. I've not realized this, so it's not a loss yet, right? Because it's what it is, right? I've not realized it yet. I am hoping for the trend shift to get into this, to layer in, sorry. But apart from that, everything else is in green. Right? Everything else is in green. Everything else we're layering into slowly, right? Very key area, right? Very, very key area, demand zone being held. These are areas where people want to capitulate, right? This is, like I said, time-based capitulation. People want to capitulate here, and the next thing you know, you get that big fuck off impulse candle straight back up, right? So let's see. Apart from that, yeah, bro, it's really hot here right now. Yeah, bro. Oh my god, in the UK it was horrible queue. Mate, it was hailing, and then it was like 5 minutes later it's windy. 5 minutes later it's snowing. Yeah, don't know what's going on. Short squeeze, Ave. Yeah. AVAX is another one, by the way, that I've got a nice spot position on. AVAX, it's not in this one, but it's on master list. Here we go. AVAX USDT. I just brought AVAX is gonna do well, right? I'm building a spot position on. I've not given the signal yet, but I am building a spot position on this. And this one ran. Like I called this one in the lows. I wasn't in Unity when I called this one for sure. But I called this one in the lows. This one absolutely ran. So you know I was pretty much all out by the time this weekly bearish divergence happened. Right? I was all out here. So now I'm just looking to react, right? Looking back down at historical levels. You literally at a weekly demand zone right over here. AVAX is definitely a good ad here. Spot AVAX. You know what? I'm actually after we get off this stream, I'll buy some. So just think of this like a signal. I will be layering into AVAX. So if you want to do some now, you know that's a signal. I'll be layering into this. No hard stop loss, guys. You know how I do this by now. If it's spot, no hard stop loss. I'm not being wicked out like some dumbass on a liquidity rate. Okay, I'm looking for confirmations of key level losses before I realize my losses. It's a bit more risky, but I like to play it that way. So yeah, but AVAX looks good, right? I do think AVAX goes high. The future for this is pretty bright. So yeah, AVAX is another one I'm layering into. But with that being said, guys, I think that'll be it for this stream. Okay. Thank you very much, guys, for being here on a Monday afternoon. Appreciate you taking the time to coming in, hear me ramble on. If anyone's interested in mentorships, anything like that, then just reach out to me in DMs. We're not going to get started straight away because I'm dealing with some IRL stuff right now, but we can get it sorted for some time in the future, right? So just reach out if anyone's interested. Apart from that, again, I'll stream next week, and yeah, just be safe. Don't be overly scared to layer in. Like I'm saying, bro, some of these alts, like I said, key ARB. I will repeat, ARB is one of the best looking ones. If you're looking for one coin to put your money into, right? ARB is probably the best looking one in terms of risk management. Okay. Thanks, Grasari, bro. Thanks, Ryu. Everyone that was here, thank you very much. Concludes, bro. And then we'll take this up again from next week, right? So yeah, see you guys soon. Thanks very much. Bye.